All right, good morning, everybody. Today is Thursday, December 4th, and we are waiting for market open. So the market open, intraday market open direction for today will be for a sell. I much rather would have preferred buys again, just as yesterday, because I've seen this pattern before. But anyway, we'll just have to follow what the direction is giving us. So let's see what else. All right, so market opens in about 40 seconds. Right. And market is open here. The scalp will be for a sell as well. See if that closes. All right, so the scalp will be for a sell. Um, see how this goes. We have an SAR established. Let's see. Take and get this 30-minute SAR entry. If we get a red X here, that will be an SAR entry. But I still think price will push up. I much rather would have preferred sells today. I'm sorry, buys today. We'll see if this red X comes in. But I think price will push up. All right. It should be this candle. So that's the entry there. All right. The so almost at, see if we can push down further. There you go. Full TP for a 1:1. Let's see. This is at 48,009. This was based off of technically it was based off of the 30-minute SAR, but they've lined up with the 30-minute, well, I'm sorry, with the hourly SAR. 48,009 was the entry. So somewhere there. Mm. All right. For the intraday market open entry, again, like for today, I really wanted a buy just as yesterday, because this pattern is pretty common. Even yesterday, I wanted a buy, because you have, and I really don't trade patterns, but if you do see something, let me see if I can draw this up, right? So you have a big push to the upside, and then you have this consolidation sideways. Typically, a lot of even retail traders, you expect like some sort of retracement, right? Back to the downside. But the opposite happens because you normally have this whole liquidity to the upside. And if price breaks to that point, you normally get either a shoot and continuation to the upside, or you normally get, any sellers being stopped out, and then price breaks back down below and then fills in any zones that were made during the uptrend. So for today, I would have preferred taking buys for this intraday market open entry, but typically based off of how I've coded it, I have to take whatever signal it gives me. So even yesterday, I preferred taking buys, but this 9 a.m. candle messed it all up. Same thing. The previous day got stopped out and then price went all the way back up. But other than that, I think other than, let's see, so let's see, today was a losing day for the intraday. Yesterday, 2 - 2R, -3R, -4R. But if you look at the previous 4 days, this is 2R win, 2R win. So already with these two wins, I think last week on Thursday and Friday, these 2R wins compensate for this -4R losses. And then the previous day as well was a winner. And the previous day as well here was a winner. So regardless of even some of this being stopped out on back-to-back days, going for a 1:2 risk to reward helps you survive any pushback or any back-to-back losses. Let's see what other entry there would be here. There's something new I'm trying. And I think this was the original. Let me see something here. 47,908. Let's see something. I'll set an alert for this zone. So this is just something new I'm trying for as markets change, especially in December. December and January, like even back testing for my strategies, December and January have been probably the worst months to trade. And typically I don't trade from halfway through December all the way through January because I'm normally out on vacation. But yeah, but I'm just if price gets to 47,908 and breaks here, I'll just take a test sell entry. And for this new one, and really not a new one because it's based off of these SARs that we've always had. So what I did, I went back through all of the entries, all of the indicators we had, and did a bunch of back testing. But for this one, I would be going for a 1:4 risk to reward. So 50 point stop loss and 200 points take profit. So even a higher risk to reward. But we'll see. If price gets here, I'll take like a small test sell entry here to see if I can ride back or ride it back down. But in terms of SAR and EMA entries, so you can see I don't think I recorded that. So this week we've actually had back-to-back wins. Tuesday we had a win, Wednesday we had a win, today as well we had a win. So this week has been pretty good so far. Just a quick one trade a day entry. What account is this? Oh, and today, and based off of like what we were talking about yesterday, if we get stopped out or price hits take profit, we ask ourselves. So for example, today, if price based off of this stop out here, if there was a bearish order block around the stop loss area or even rejecting at this candle that took us out at stop loss, I would be looking now to take a sell back down. But since there's no rejection of a bearish candle, since this was a sell and it ended up being stopped out, if it rejected off of a bearish order block, I would have taken a sell on my other account or one of my other accounts for a 1:3. So that's that account for this one right here, the one that we even went over yesterday. So this one, you just wait for the intraday market open trade to hit stop loss or take profit. And then you ask yourself, the candle that hit stop loss or take profit, did it reject off of any order block that you can either re-enter the trade on or catch the reversal back on? And you can see for this one, so far it's and I think I started monitoring it on 21st of November. 6 trades so far, 4 winners, 2 losers, but I'm going for a 1:3 risk to reward. So 100 points stop loss and 300 points TP, and risking like 1% per trade on a 200K account. So each win gives me 6,000, each loss, takes out 2,000. And it's a pretty neat and consistent one as well. So this one I did backtest as well for it. Okay, so let's see. Let me see. Where is this account? So let's see if this will push down here. Again, this is just a trial. I'm doing a new trial for these entries, but let's see if we can push down 200 points from here. But this one is like a 50 point stop loss, 200 points TP. And we'll see if it pushes down. The idea behind this trade or the idea behind this strategy is, you remember when I used to tell you guys that, and regardless whether it's a winner or loser, like this one, we're just testing, but I am taking it on one of my main accounts. But you remember when we talked about when a 15-minute SAR comes in during market open or literally around market open, price typically reverses from that point. So the essence of it is with this indicator, which is this same indicator, but I think that, yeah, this one, ideally, what I'm looking for, and if I replay this a little bit here, so the idea is based off of two things. For this intraday entry, we rarely are wrong on the direction. Like even the times we get stopped out on this entries for the intraday market open, typically price comes back in the same direction. So other than yesterday when we got stopped out and price kept going heavily against us, you can see like the previous day got stopped out. Guess what? So this one was a buy, got stopped out, price went all the way back up. Same thing previous day, got stopped out, price didn't really go against us as much, came back all the way back down towards take profit. And pretty much most of the times we've gotten stopped out for this intraday market open, same thing here. Got stopped out, but guess what? Price went back or price kept buying. So the essence is for this one, I just ask myself, where are the, and typically I just look for I'm looking for the 15-minute SARs. So I look for the 15-minute SARs before market open, and then I mark those areas. So I mark those two areas. And typically there's normally going to be two SARs. So sometimes they're going to be away, like far away from price or close enough-ish for the price or towards the price. So if I'm looking for sales, I'll look to take sales at both of those SARs. If I'm looking for buys, I will take buys when price hits both of those SARs. And for this one, again, like 1:4 risk to reward. So 50 point stop loss, 200 points TP. Sometimes typically you'll get two trades in a day. Sometimes you'll get at least, not at least, sometimes you'll get one trade a day. And sometimes you won't get any trade whatsoever because the SARs will be so far away from where price is at. This week, they haven't been the best performing, but even upon back testing or with back testing, they are pretty pretty profitable given that you're going for a 1:4 risk to reward. And the day you'll catch both entries and both entries end up hitting TP and you're risking like even 1% per trade, that's like 8% right there. But for me, I'm only risking like 0.5% per trade on this trades right here for this particular strategy. It's still a work in progress, but I am, forward testing it. So we'll see. So hopefully this one can push down. For the people who said, personally, I don't set break even, I don't take partials, but just know that this is a 1:4 risk to reward trade. So for people who set break even, you can do break even at, I don't know, 1:2 or 1:3. But personally, I do not do break even or partials. There is a buy entry here, but I think we are a little late to it. Actually, the buy entry is here. So there's a buy entry there. I'm taking the buy for 20 point stop loss, 20 points TP, and I think I've already hit. It was based off of a 15-minute SAR. I'm still in the trade. I think I got slipped in it, but the entry was this green candle, but I'm still in this trade. So 20 points take profit, 20 points stop loss on US30. But that one was a pretty quick one there. But this is based off of this 15-minute SAR rejection down here. But keep in mind the overall trend, I think now that we pushed up on market open and came back down because like for what is it? And I think we're or this is almost at TP. Damn, my slippage must have been so heavy. I'm still in this entry. Let's see. See if we can push back. But anyway, whatever happens to it happens. But I think now we might be good to start going back down because looking at this 15-minute time frame, what's that concept? Accumulation, manipulation, and distribution. So you had this accumulation phase, you had price push up, manipulation, and then distribution back down. So I think we are going to push back down from where we are. But we'll see. We'll see how that goes. So I'm still in this one. I got slipped on this particular entry here. So hopefully price can push up before coming back down. And at least this one is still going. But if we push down on US30 here, we will push down pretty heavily. So I'm stopped out of this particular trade. I think I got slipped somewhere like this. So I'll just count it as a loss. I didn't identify it on time. So for today, we're back down to break even. And we'll see if we can get another one here. But honestly, I would much rather hold on to this one for the whole move. But yeah, if US30 pushes down here, we should push down pretty intensely here. This one is 47,874. 74. This is the one that got stopped at. So, just take a screen grab for my journal. All right, so unless we form any other SAR on the way down, I don't see any other SAR entries. The nearest ones are all the way down here at 44,560, which even gives credence to US30 pushing down, because if we ask ourselves, where can US30 reject from? And you can see we are also coming to this bearish order blocks. So SAR wise, unless we form any other SAR between where price currently is all the way down here, we know that there are these SARs that are down here. So in case of any reversal or meaningful retracement, it would probably have to happen around here. And you can see this coincides with this whole structure from yesterday down all the way down here. And look at that intraday. Like, this is pretty annoying. I hate when this happens. But if now, for example, this candle that took us out at stop loss would have rejected off of a bearish order block, I would have entered a new sell here on the close of that candle and then read price for 300 points. And this entry is still pushing down here. So let's see if we get 1:4. So for example, for me on this one, I'm actually risking 1% per trade. I forgot. I need to take that in half. But so if I end up winning this trade, it will be like a 6K win. I did take the original one on market open. Remember, so for today we had two 15-minute SARs. So if I go ahead and replay this before market open, and that's why I have this one right here. So before market open, we had two. So the first one for me, I ended up losing 1% there for that one, because on the push up, that one got taken out. And then I waited to enter this second one. For this particular trades, I prefer taking them the first 30 minutes of market open, because we're going for like a 200 point take profit, and that's a little high for US30. Or I choose not to take any if none of those zones, or if none of those 15-minute SARs line up before 11 or before 11 a.m. So I don't take any of them after 11 a.m. So for this ones, and even upon my back testing, is just like between 9:30 a.m. to 11 a.m. The other one I'm considering doing is the hourly SARs. I also like hourly SARs. They normally have like some good sort of rejection. So if not for the 15-minute, the hourly as well. But if I started doing the hourly, then I would have to like start taking multiple trades, like up to 4 trades a day on one account, which I prefer not to. But for this particular trade, it's currently at we had already reached a 1:2 risk to reward. So if you're the kind of person that takes partials or sets break even, this is the point where you can or you should start thinking about that. Personally, it's either stop loss or take profit. And primarily it's because I've backtested this since January of this year. So, and for me, when I backtest either using stop loss or take profit as an exit. So, yeah, so for me, I'll keep holding on to this one. Mm. Let's see. So for that intraday market open, this whole week, unfortunately, this whole week it's been a loser. So Monday was a loser, Tuesday, Wednesday, today as well, compared to the last week where we had 4 winning days, 1 losing day. The highest losing, and for this one, because it's one trade a day, I think upon when I back tested the highest losing streak, I think at some point between January and October, because by then that's when I finished back testing it. And by then it was October. There was only one one instance where you would have lost 10 back-to-back trades, and pretty much it would have been over 2 months. So like you end up having seven back-to-back losing days on like 1 month, and then there was like two winning days, and then like four back-to-back losing days. But I think between January and October, which is when I first started trading this, you would have only, if you're risking 1% per trade, you'd have only blown your account once, but then you'd have gotten it back because after the losing streak, you'd have had a winning streak. But personally, I recommend for this one, even though it's one trade a day, risking either zero point 0.5 or 0.75, because even for that 10 back-to-back losing streak that I saw, of course, if you're using a pro forma account, you'd have ended up blowing it. But if you use 0.5% per trade, you wouldn't have blown any account during the year. So for this one, which is this particular one here that we go for a 1:2 risk to reward, just risking 0.5 or probably 0.75, probably 0.75 if you're looking to pass challenges quicker. But if you're risking or if you want to go full risk and you're open to like retaking a challenge, and I think if you blew it, it would be in a course of 3 months. It wouldn't be like so those back-to-back losing days were not like consecutive. But you can also do 1%. So this one is still going back and forth. I really don't see too much happening here. Let's see, 15-minute EMA. Yeah, I don't see too much happening here. What else? Let me see. Because nowadays I really don't want to keep this live sessions too long. Yeah, so I really don't see too much happening here. I still anticipate this one to go back, to go back down and get to. So the take profit of this is at 47,708, 707 area on an Oanda chart for US30. So for me, I'm still going to keep holding onto this until it decides what it wants to do. But I really don't see anything else worth holding on to. And given that nowadays I'm on most of my accounts, I'm taking like one or two trades a day. I'm pretty maxed out because I took a loss on this one. There's that account I take an market open scalp, same as today. This one ended up losing. And this one is typically for a 20-point stop loss and 60 points take profit. So I don't see too much. So I think this is a good trade. I think it's going to hit. But other than that, I will see you guys tomorrow. So for tomorrow, hopefully we get a win on the intraday market open entry, because if we get a win tomorrow, it would wipe out 2 days worth of back-to-back losses and would only be down like 2% for the week. If it's a losing day, it's a losing day. There's nothing much that we can do. And for me, and that's why I've coded all these buy and sell entries. So exactly at 9:30, that's when I get that entry. And pretty much since I'm the one who did this, like I can tell whether the entry will be for a buy or a sell. But I don't really go against what this system is telling me. So if it tells me it's a sell, then I take that sell. If it tells me it's a buy, I take that buy. But that should be it for today. I will see you guys tomorrow. Have a good rest of your day. All right, guys.